Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking equities and E-mini S&Ps. Still trading in a pretty narrow range, still very near the all-time highs. Nothing has really changed over the last 6 or 7 sessions. We've just been kind of guiding our way towards a year-end trade that will hopefully keep us sideways. I think the real fear here was that there was going to be a year-end sort of tax reform sell-off. That doesn't look like it's going to happen. So we have now just kind of trading sideways, still on all-time highs. If you look at some of the extenuating commodities, Bitcoins and gold and treasuries, they're seeing ranges that are starting to move a little bit, but we're not seeing it in equities. Despite the fact that we got some slightly weaker than expected consumer confidence today, everything is still steady as she goes in stocks. The trend remains very firm in place towards higher levels and unlikely to see that move before year end. And if you look at volatility, it is its highest in really a couple of weeks, but it isn't really suggesting anything other than steady as she goes. The VIX index did print above 10, which we used to talk about it printing below 10 and 9, and it has remained there for much of the year with moments of elevated levels. But right now we're just seeing kind of, I think, a year-end maybe trade sequence that's kind of has volatility just up in the air. Maybe it's a volume trade, a volume thing. And I don't think it's anything other than that. And as we head into year-end, we hold the trend. We see volatility remaining low, although off the lows. And what's next? What's going to be next for equities? I mean, because we haven't really seen much this week, and we won't see much this week other than Chicago purchasing managers on Thursday. So right now, what is next? Well, we've got employment in the first week of the year. We've got FOMC minutes first week of the year. And I think that those are, and the FOMC meeting at the end of the month in January, those are really what equities are going to be looking at. We got through tax reform. I think we're still going to see some ripple effects from that. Washington still has a lot of work to do as far as building any confidence, but that doesn't seem to be something that's distracted stocks all through 2017. So right now in 2018, short look is, what will the Fed say from the minutes? How will the employment numbers change, if any, at the end of next week? And then obviously the last meeting for current chair Janet Yellen, anything that will change as she passes the gavel on to Jerome Powell. So those are the 3 things equities will be watching. I doubt we'll see much of any pullbacks unless there is a significant shift in something that we don't know about, whether it be a geopolitical risk, whether it be something in the U.S. economy that we aren't seeing, something with the tax reform bill that was maybe a hiccup. I don't think any of those things could happen, but certainly have to keep them on the radar. One reason why gold might be trading higher, one reason why cryptocurrencies have become so popular. But ultimately, equities are steady as she goes, higher until they're not. And right now, that doesn't seem to be for the foreseeable future. This is Todd Colvin coming to you from the floor of the CME Group.